Good morning and welcome to Friday's edition of Trading Hour. We're coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Hormus Fatakia, and markets have literally taken off today. 300 points gain now on the Nifty as it inches towards that 28,900 mark. We've recovered more than what we lost yesterday. Yesterday, benchmark indices, at least the Nifty was down 200 points. Today, we're up 300 points. And it's a large cap driven screen in action and buying. So Nifty IT, Nifty FMCG index are leading the gains in the frontline pack. The top four gainers are ITC, Infosys, Trent and HCL Tech. So dominated by tech and consumer. Midcaps in the green, but trailing the frontliners. Midcap index of a gain of about 0.5%. The advanced decline ratio, though, is positive. Good day.
Oh, good day indeed. And you'd want a kind of day like this, considering the week that we have had, a week of consolidation, a week of some correction as well. And yesterday, of course, the expiry related factors, the bit of an inkling came in yesterday itself, right? When the bulls defended 24,500 very firmly. We ended off the highs of the day. We managed to close above that 24,600 mark. Today, we have crossed 24,750. So multiple positives coming in. And once we cross that 24,750, it's been a one-way move for the indices as well. So 24,900 is now where the index is, and so that is one good factor. Of course, you cannot take away from the earnings reactions from the broader markets, and they are at the extremes in today's session as well. Look at Honasa Consumer now 17% higher on the stock, and it is back towards its IPO price, which is at 324. So good going for Honasa Consumers. Of course, there are results that have shown signs of improvement, and the slightest bit of positive has been taken well by the street. So 17% higher for Honasa, top gainer on the Nifty 500. The other one is Emcure Pharma, and that came out during market hours yesterday. The stock is now up 10% in an upper circuit there as well. It's at 1284 now is Emcure, and it's around about 30% higher from its IPO price, which was around 1,000 rupees as well. So results were good for Emcure Pharma. The stock was up 9% in yesterday's session as well. And today, Kotak has come out with a note where it has increased its price target to 1625, which means that is another 40% upside from yesterday's closing levels. So that's another positive for Emcure Pharma as well. We'll look at some of the other movers then. On the flip side, that is the Vari Energies, of course, both Vari and Premier, they were smashed in early trade. Vari down almost 10%, but it has recovered slightly from the lows of the day. Now 6% lower. All their peers in the US were bombed in yesterday's trading session, with Sunrun and all of these stocks falling almost 20 to 40% in just one trading session, and it has shown a bit of a cascading effect on Vari and Premier as well. KPR Mill is the other one. KNR Constructions is down 3.5%. KPR Mills down 2.5%. Sun Pharma, of course, the result reaction down 2.5% among the top losers on the index. One of the very few names that are down in today's trading session. But beginning the show with corporate conversations, then Subros is the management that we first speak to. The company managed to achieve the guidance of double-digit revenue growth in FY25. Mr. PK Duggal, who is the executive director and CEO at Subros, is joining in now to discuss the quarter gone by and the road ahead for the company as well. Mr. Duggal, thank you so much and good morning, and thank you for joining in. You managed to achieve your FY25 guidance, which was of double-digit growth in revenue. Do you expect that to continue in FY26 as well? What are the kind of demand trends that you are currently witnessing on the ground?
Thank you. Good morning. Thank you for having me on your show. We have done well in FY25, and we are hopeful to continue this trend for going forward also. But FY26 industry need to be watchful, but because of many geopolitical tariff issues and other disruptions which are emerging, so still we are sure that we will be doing better than the industry performance.
If you could quantify that for us, Mr. Duggal, in numbers, 10 to 15%, 20%?
No, it would be not double digit, but it would be very high in the single digit also.
And this is assuming some sort of disruption on account of geopolitical issues, or is it that auto demand on an organic basis, domestic demand, is also muted in FY26 vis-a-vis FY25?
No, despite all this disruption and the mute of industry, because commercial vehicle is going to be muted and passenger vehicle will have a very moderate demand, but export opportunities for the OEMs are very high. So we are banking on that, and we will overcome this situation maybe in FY27, but FY26 would be a watchful year.
Okay, and a single-digit kind of a growth. What about margins? FY25 margins were 9.6%. Can you inch them up, given what we spoke about? And on exports as well, since that's the opportunity you're trying to target. What is the export contribution and the expected growth?
So in FY25, our EBITDA margin has improved to 10.22%. So we have already clocked that milestone of 10% plus. So we are going to improve it further because in last quarter we have seen 10.86% margin. So first milestone is to cross 11%. And with the current effort, what we are doing for indigenization or localization or improving the internal efficiencies, we are towards that milestone.
Mr. Duggal, what is the current revenue mix that you're seeing currently? And if this shifting focus towards green mobility, do you see that becoming a bigger part of your business over the next 1 to 2 years?
Yes, of course, because EV transition is happening and it is rapidly increasing year by year. So our products now for strong hybrid and EV vehicles are now in the product range. We have already secured business of 20% of our total revenues going to the green mobility. In the current scenario and in future, where the last mile connectivity will have much more EV penetration faster than any other segment. So there also we have introduced our product with the OEM, and that's the confidence we have that our growth would be better than the industry.
You said 20% of your revenues today are from green mobility?
Yes, from strong hybrid EV or CNG vehicles.
And that number, sir, could go up to, say, in the next
that would be, I think we have a long-term target to make it around 40%, but in the short term, maybe next year 25 and then going to 30%.
Got that. And exports, you spoke about exports and how that is an emerging opportunity.
So
what percent? Yeah.
Export of vehicle is a big opportunity for the OEM. From India, export vehicles are increasing year by year. Maruti, of course, is dominating that segment. So our product introduced in all such vehicle will have a growth opportunities for us. If OEMs export grow, we will also grow in that line.
Mr. Duggal, I wanted to emphasize on this green mobility bit, right? You spoke about taking it to 40% in the long term and you want to go up to 25 this year. Would the launch from Maruti with regards to the e-Vitara by September is what they are planning to launch? What is the kind of incremental opportunity that you're anticipating from this? And would that be instrumental in taking that to the 25% mark this year?
Of course, that would be the key driver for us because our in Grand Vitara, we have a substantial business in HVAC, hose and pipe, and for engine cooling modules. So that would be the key driver. And if these variants, including Mahindra and Mahindra and Maruti, EV penetration increase, growing in future, maybe next 2 to 3 years time, that would be a key business opportunity for us also.
How are the margins in green mobility as you increase your contribution from green mobility? What impact will it have on your EBITDA?
It will improve because these are niche products. They are new technology products. So initially there will be margins available. But as we grow, more and more competitiveness has to come into this business. And that will be offset by more localization in new technologies.
Mr. Duggal, there is also a mandate now of having AC cabins in trucks. And after the third quarter, you had talked about blocking all of that and moving into the developmental phase as well. Part one of my question is, what is the incremental market size do you expect from this regulation? And part two of my question is, how do you expect the overall trucking segment itself to do this fiscal?
So, as I mentioned before, that truck market per se is muted in overall growth in last year, FY25, and we see the similar trend coming in FY26 also. But since AC penetration in N2 and N3 category from almost 15 to 16% will grow directly to 100%, that's a big opportunity for us to grow business within the truck segment. On the second part of your question, we have tied up businesses with the OEM, most of them now. And we are now starting for the ramp-up stage because October sales of truck with AC will start. And before that, I think OEM will start production to bring the pipeline in line with the customer demand. So it's a huge opportunity for us. We are expecting almost 100 crore delta business coming in from these incremental opportunities in truck segment.
And just quickly on railway, how is the railway side of the business doing? What are the orders that you serviced in Q4? What's the opportunity over the next few quarters? The content per coach in railways, and generally for you in terms of revenue contribution from railways, how does it trend up?
So railway is the second, I think the third largest attraction point for us. We got into railway driver cabin. We got expanded now our business into coach aircon. Last year, we got a large business of 40 crores, one tender. We service almost 40% of that. Balance will come into this. There are few large tenders are in pipeline now. Our product range for all coach aircon has already been completed. The revenue per coach is substantially different from a ICE PV vehicle. It is almost more than 40 times or 50 times. So it is not comparable business. From margin side, of course, railway is much more margin segment for us.
All right, Mr. Duggal, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management of Subros on the road ahead for the company, intending to take their green mobility contribution to 40% over the long term. The stock up 19% in the last 1 month and doing fairly well for itself in today's session as well. Take a short break. Up next, we discuss all things commodities with Manisha Gupta. Stay tuned.
Narendra Modi ji, esteemed dignitaries, good morning. Let me begin by saluting our beloved Prime Minister Shri Narendra Modi ji for the resounding success of Operation Sindoor. This success is a shining testament to his steely resolve and to the unmatched bravery of our armed forces. Friends, I also warmly congratulate Shri Jyotiraje Scindia ji for crafting this transformational platform. The 8 states of Northeast are rightly called Ashta Lakshmi. With the blessings of Lakshmi, the goddess of prosperity, the Northeast is not just rising, but to my mind, it is roaring. In the near future, I can clearly see this region replicating the miracle achieved by neighboring countries like Singapore, Malaysia, and Vietnam. Respected dignitaries, for Reliance, it is a matter of privilege to fulfill the dreams of a region that has the fastest rate of economic growth with the youngest population in India. Today, I make 6 commitments to the Chief Ministers of Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, and Tripura. First, Reliance has invested around rupees 30,000 crores in the region in the past 40 years. In the next 5 years, we will more than double our investments with our target at 75,000 crores. In addition to creating over 2.5 million direct and indirect employment opportunities, we aspire to touch the lives of most of our 45 million sisters and brothers in Northeast. Second, Jio has already covered 90% of the population with over 5 million 5G subscribers. We will double this number this year. Jio's priority will be to bring the revolutionary power of artificial intelligence to all schools, hospitals, enterprise, and homes. When talent meets technology and competence meets connectivity, our Northeast will surge ahead. Third, Reliance Retail will vastly increase its procurement of staples, fruits, and vegetables to boost the income of farmers. We will also invest in factories for high-quality FMCG product in the regions and promote the region's fabulous artisan economy. Fourth, we will greatly enhance generation of solar power in the region. Our Prime Minister often speaks of converting waste to wealth. In line with this, we will convert the region's vast wasteland and wealthland by setting up 350 integrated compressed biogas plants. Fifth, Reliance Foundation will bring the best of cancer care to the Northeast. To begin with, we have established a 150-bed comprehensive cancer hospital in Manipur. We are collaborating with Mizoram University on care of breast cancer using genomic data. In Guwahati, we have built an advanced molecular diagnostic and research lab. It will be among the largest genome sequencing capacities in India. We will help transform the Northeast into a healthcare hub and a research powerhouse. Sixth, the Northeast is a treasure house of world-class talent in multiple sports. Reliance Foundation will work with all the 8 states to set up Olympic training centers which will prepare our youth to be tomorrow's medal winners in Olympics. Most respected Prime Minister Shri Modi ji, you have achieved something unbelievable and unimaginable. You have brought the Northeast from the periphery to the center of India's developmental map, from the margins to the mainstream of the India story. Under your guidance, we in industry will work with all the chief ministers to make the Northeast an inspiring model to demonstrate to the rest of the world how we can make progress, how development can take care of Dharti Ma, how Lakshmi Mata can reach every home, and how Bharat Mata indeed embraces all her children with her boundless love. Thank you. Jai Hind.
Mukesh Ambani there at the Rising Northeast Summit, the Reliance Industries chairman affirming his commitment to the region and also announcing that they'll be doubling their investment in the region over the next 5 years. Take a short break. Back with more on the other side. Stay tuned. Welcome back, and shifting focus back to the commodity space now, and Manisha is joining in to talk about directionless crude oil. Manisha.
Well, after 3 weeks of gains and hitting an almost 1 month highs, we have seen some profit taking coming in for the crude oil prices. It is down by nearly 2.5% for this week, headed for a weekly decline, as I said. And the profit taking comes in on the back of 2 or 3 factors. The major one clearly has been the statements from OPEC and allies. Remember, they have increased output for the month of May and June. And the expectation is that July could be a third straight month where OPEC would be increasing production by 411,000 barrels per day. Well, the estimates are, and the conversations within OPEC is that they want to increase production by 2.2 million barrels by the month of November. So we will see this happen. But the point is that this increase in production is coming in at a time when the global markets are looking at weaker demand here. And it's not just about OPEC and allies, because the non-OPEC countries, especially US, also seems to be increasing production. Their inventories have been on a surge and their production near all-time highs, and that's weighing onto the markets. Interestingly, what the street will watch out for is the US and Iran nuclear conversation. That is yet again happening on 23rd of May, and then potential threat from Israel on Iran's nuclear facilities. So markets are looking at that premium coming in for prices. So it's a mixed kind of a fundamental, and as you rightly pointed out, it's slightly directionless and we seem to be getting stuck in a range. But having said that, after 3 weeks of constant gains, we are now trading below $65 and hoping or looking forward to a weekly decline.
Indeed, Manisha, thanks a lot for that. A weekly decline in store for crude oil prices, just as when prices had started to hit a 1 month high. But Saumil Mehta from Mirae Asset Share Khan is joining in for a quick chart check. Saumil, good morning. Thank you for joining in. Very quickly, if you could tell us, the Nifty now poised for 25,000. What next if it crosses that mark, and your stock recommendations as well for the morning?
Markets have taken support at the lower end of the range. Nifty was trading in a range between 24,500 and 25,000. Now the markets have taken support at the lower end. I'll be expecting this range to break out on the upside. the short-term targets would be 25,200, 25,300. That will be my short-term targets, which is the upper end of the Bollinger Band on the daily charts. Above that, I think in the medium-term outlook, I'll be looking for all-time highs above 26, 200, 300 levels. Definitely high top, high bottom formation, taking support every time, taking support at 20 daily moving average and continuing the uptrend is a very good sign, very strong sign. We have been a little cautious in this range, but looks great now. The momentum has picked up. IT, reality, metals all look good. So I have two picks from one of them is from IT and one of them is from metals. First one is Coforge. Coforge has a small consolidation taking support at 20 daily moving average, continuing the uptrend. Stop loss would be 8280 and target would be 8750. Same thing with Hind Copper. Hind Copper has just broken out of a small basing out pattern on the upside, taking support on the averages. Stop loss would be 222 and targets would be 245.
Thank you very much for that. On Coforge today, Bernstein has come out with a report on IT. They're saying turning the corner for IT. And their top picks are Infosys and Coforge. Coforge has been doing well in terms of very growth rates, stronger than the industry, and they expect high teens revenue growth to continue for Coforge going forward. And plus, it has a 50% exposure to BFSI. And amongst all the sectors, the demand from the financial services client is the most resilient. So that's driving their optimism on Coforge and Infosys. Bernstein's top picks in IT. Get into a break. On the other side, the management of Astra Microwave Products will join in. Welcome back. Let's turn our attention to another corporate conversation, Astra Microwave Products. In Q4, the company's top line went up by 15%, profits up nearly 15%, margins expanded. Mr. Kabra, who is the Director of Business Development and Strategy at the company, is now with us on the show. Thank you very much, sir, for joining in. I was looking at your FY26 guidance, and I believe you're guiding for a top line of 1,300 to 1,500 crore rupees. Is that correct?
No, I think our guidance is between 1,200 to 1,300 crores.
Okay.
With the order intake expected between, again, 1,300 to 1,400 crores. That's the order intake, which we expect in the current year.
Okay. So if your top line guidance is 1,200 to 1,300 crore, you're anticipating a 15 to 25% revenue growth next year?
Yes, please.
Okay. And that is a big jump because last year you ended with only a 15% revenue growth. So what gives you the confidence that you will be able to accelerate growth in FY26?
I think we all need to congratulate our defense forces, our defense labs, DPSUs, and the business prospects are looking pretty good. We are sitting on our consolidated order book is right now 2,303 odd crores and a standalone order book of 1,951 crores. We are expecting that our ARC business alone will have an order backlog of about 100 odd million plus by the end of next year. So all these things translate into quite a significant revenue potential. And the new products which we spoke about, we have always been speaking to you about our focus on productization and solutions. I think combined, everything is coming together and the prospects look good. And I think the year after that and after that would be even significantly better.
Mr. Kabra, good morning. Thank you for joining in. With the kind of order book that you have, what is the kind of revenue visibility that you are seeing? Because your current order book is supposed to be executed within the next 12 to 36 months, if I'm correct. So is that the kind of visibility that you're seeing or you go beyond that? And part two of my question is, will defense continue to remain the primary contributor into your business mix at 73% currently? That number goes higher this year?
Absolutely. I think the order book visibility, if you ask us, these are orders which we are almost certain to get because our order translation into sales is about 24 months to 30 months. And we have had a very significant carry forward order book over a period of time. So, the incremental growth which comes in from us selling our counter drone systems, et cetera, that could be a surprise element if it kicks into orders and they translate into revenues in the current year itself. Sorry, what did you ask me? The second part?
The second part, sir, was that will defense continue to remain a majority contributor to the business mix? It's 73% currently. So does that go higher this year?
Absolutely. We are a predominantly defense company, right? But I must emphasize that we are a fairly diversified, very well diversified defense company with, let's say, about 45% of the business coming in from our core of radars. We have, if I give you a breakup of about, if I look at the broad breakup, we have a significant revenue stream which comes in from electronic warfare, which is the future, as you're aware. We are big time into missile electronics and telemetry. In fact, critical subsystems in Akash missile were made by Astra in this current conflict. AVAX, the Netra, the eyes in the sky, we have been a significant contributor to Netra and multiple radars which played a part. We have space, which has been more than a decade-old business in our company, and space continues to play a big part. I think the only diversification from non-defense which you would see, a little bit of exports, but again, they are predominantly used for defense industry, and the hydrologic and meteorological segment which we have. But again, if I sell it to the defense forces, wars are, climate plays a very critical role in determining the outcome of wars. So there is a very diversified revenue stream which
Indeed.
us for predictability and sustainability of business which we require.
Atim, the numbers that we have are for March. Operation Sindoor took place after.
Yeah.
Has there been any ramp up of order inflows? Have you heard from the government about advanced procurement? Just asking whether, there has been a seminal change, a turning point in the kind of defense ordering that we should expect because of the geopolitical tension seen in the last few weeks.
Simple answer, yes. Okay.
Can you quantify that
There's a
then?
very significant interest, and more importantly, I think this operation proved the resilience and the strength of the domestic armaments which have been supplied to the defense companies, right? So I think there is a very strong sense of requirement of indigenous systems, Atmanirbhar systems.
No, indeed. Mr. Kabra, sorry to interrupt because we're, running short of time, but you said that we have seen a significant shift. Will you be able to quantify that? Like, are there more orders now, say in the month of April and May? Some analysts we were talking to said that some companies are now working 3 shifts. What is the change that you've seen that you can quantify?
I don't think they are overnight orders, if I may say. But there are very significant number of inquiries. There's a massive uptick in the inquiries which have come in. I think there is a process which has to be followed in the release of the orders. And these orders, when released, will translate into revenues. So we are quite certain about that.
Lots of questions, but paucity of time. Mr. Kabra, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of Astra Microwave on the road ahead, looking at around 1,300 crores of revenue in the current financial year. The stock, though, is down around 1.5% in today's session. Take a short break. On the other side, joined by Rohit Seksaria from Sundaram Mutual Fund for a market conversation. Welcome back, and on to a quick market conversation then. Rohit Seksaria from Sundaram Mutual is now joining in. Rohit, good morning. Thank you for joining in. What do you make of this earnings season so far? There has been a lot of numbers that have either surpassed or they have disappointed on the street. I would single out FMCG in particular. Where in the FMCG space do you still find value, whether it is the discretionary or is it the staples? Where are you veering towards?
See, FMCG, we have always veered towards discretionary over staples. Valuations in the entire consumption space have always been rich. The key argument for discretionary have been the growth runway for discretionary is much longer and they have a higher growth path. And that's where we are veered towards discretionary. Even now, when we talk of the tax cuts and because of that fueling consumption, I believe most of that will go in discretionary consumption rather than staples. And that's where we prefer select discretionary pockets, whether be it your restaurant or luggage, durables, stuff like that.
Rohit, does Honasa come in consumer discretionary? Because that's clearly the stock of the day. Good earnings. And I remember the time when in the September quarter when the company reported a loss, investors were spooked that Mamaearth's growth is slowing down. So core earnings are under pressure and the stock took a slam dunk. From a 52-week high of 540, it went down to 200 rupees. It's clawing its way back, but it's still about 40% away from the recent peaks. Have you looked at Honasa Consumer and what are your thoughts now? Is it attractive?
Without getting into stock specific, in general, any space within the staple side has been marred by low volume growth. So that has been the key challenge there. And there we don't see a sharp uptick. You may see a small uptick in growth, but we believe valuations are more than pricing in that kind of an uptick.
What about autos, Rohit? Numbers have been, well, okay-ish, if you could call them that. We're still yet to hear from Bajaj Auto. But within the auto space, where do you go to? Whether it is two-wheelers, four-wheelers, tractor names, auto ancillaries, it's a very wide gamut to choose from.
Sure. So autos, we have been positive, but mostly towards ancillary side, we have been positive. However, going forward, I see green shoots on even the four-wheeler side, thanks to both what our view on consumption has been in terms of tax cuts or let's say the pay commission coming next year. Those should drive the growth on the four-wheeler side. Even in terms of when we talk of four-wheeler, one thing to keep in mind is the model cycle of individual companies. There are a few companies which have good launches lined up, and in our view, they will do better in the medium term when the launch happens.
What about IT? IT is doing well. Bernstein says it's turned the corner. US economy is still resilient. Financial services demand is actually quite strong. And we know that IT companies have about a 30-35% exposure to the BFSI sector. What's the broader call on IT, and do you own any in your portfolio, any stocks?
IT, we are more on a neutral side. On the positive side, you have rightly mentioned all the factors. But the key negative, which we don't know how it plays out over medium term, is the role of AI and how it changes the entire IT space and the way IT services are provided. So that's a key medium-term negative to be kept at the back of the mind. In the short term, AI will give a lot of opportunities to even our Indian IT companies. But moving beyond the short term, how it plays out in terms of the roles, in terms of the entire coding space, that we are not sure right now. So that's where we are keeping a more neutral stance on IT.
All right, Rohit, thank you so much for sparing time and joining us today. Looking forward to having you more often on this platform. Neutral on IT, the view from Rohit Siksaria, veering towards discretionary more compared to staples. But Vari Energies is now down 6.5%, still a recovery from the lows of the day. Deepak Fertilizers is one that has sprung to the lows of the day, now 4.75% lower there on that stock. And one that has been lower since the start of the trading session has been Gravita India. That too is down around 3.5% in today's trading session. By the way, you can see some lines on your screen from the Concor earnings call. There's the Exim volume growth guidance at 10%, domestic at 20%, exactly what the management told us before the call earlier in the day. And they're seeing a 13% volume growth is also what the management told us earlier in the day when they spoke to us before the call. And that is the earnings highlights from Concor, still 2.75% lower there. Reliance Power has now moved to the highest point of the day, 10.5% higher on that stock. The other one that has moved higher though is TBO Tech. It's going to be reporting results and the stock is up 8% in today's trading session. So good going there for TBO Tech. And as Rima was mentioning, IT is doing well for itself. So Midcap IT can't be the one left behind. First Source Solutions is up 4.5%. Zensar is up 4%. And some of the other names too are doing well for themselves in today's trading session. So good going for IT in today's session. And just before we take the break, IFCI is also now sprung to the highs of the day, now 7.5% higher on that stock as well.
BSE is rebounded. After yesterday's cut, BSE has actually come back. And I think there were some statements that Avas picked up that unless the expiries on, actually I don't remember exactly, but I think if it's only on Monday, then it would be a problem, Monday and Friday. Other days it should be okay. So, but BSE is actually rebounded pretty well. And Viatech Vaba continues with its gains from yesterday. It was up nearly 5%. It's followed it up with another 2.5% up move. Get into a break then. On the other side, the management of Electronic Smart India will join in to discuss the Q4 numbers. Welcome back. As promised, let's focus on Electronic Smart India. The company saw its margins contract on account of increased sales of mobiles and rising share of revenue from Delhi NCR. Revenue growth was pretty okay. The company's top line went up by nearly 12.5–13%. To talk more, we have the management of now joining in, the CFO of the company, Mr. Deverakonda. Thank you very much, sir, for joining in. First, if you could just tell us what's the outlook on demand? What's the, say what would be your FY26 revenue guidance, the same store sales growth that you're anticipating in this year?
Good morning and thank you very much for having me on your show. For FY26, we have revised our business plans in such a way that our top line growth would be around 12%, with same store sales growth of it will be between 6 and 7.
Sorry, I missed the revenue growth. 6 to 7% is the same store sales growth. And the top line would be?
Top line would be around 12%.
12% top line. Okay, so similar to last year broadly. And what about sustainable margins? Is there scope for you to improve margins? Because last year margins contracted. And what was the reason for that?
See, last year what happened, we could see the demand slow down from Q2 onwards. Q2, Q3, Q4, there was demand slowdown. It was mainly due to the fog of inflation descended. So that has been ultimately translated to the demand slowdown, which resulted in the truncated margins. And for the current year also, we did witness demand slowdown for the air conditioners due to adverse weather conditions in the last 3-4 weeks. So as a result, I think this year also our EBITDA margins will be around 6.5%.
Mr. Deverakonda, good morning. Thank you for joining in. What's your store addition strategy going forward? Since you mentioned you've reworked your business plans for this year, where does your store addition strategy stand at? You added around 40 outlets now in FY25. And you currently operate around 200 stores, most of them being in Andhra and Telangana. So how many more do you plan on adding this year? And is there a plan to expand geographically as well?
See, this year we will be adding around 25 stores, of which around 6 to 7 stores will be around in NCR. And remaining stores will be in AP Telangana regions. And we had a plans to expand to other geographies, but currently we are soft pedaling. Probably for the next 2-4 quarters, we would see the market responses. Based on that, again, we'll speed up our expansion plans to other regions.
Okay. What would the breakup look like between North and South? Because currently, you're predominantly a player more in South of India. So going forward, what would the breakup with the store additions?
For the current year, like we will end up adding another 7 stores, as I mentioned, in so North Cluster, and South Cluster will be adding stores organically in the South Cluster, and it will continue for next couple of years.
So you're doubling down on the NCR region, Mr. Devarakonda, considering the fact that that's the only geography other than AP and Telangana where you're looking to add stores. What is the margin differential between the two, if you could tell us that? Because in FY25, your sales in the South came with a 7% margin, 7.2%, but the sales in the North were on a fairly lower margin.
Yeah, we are new in that North Cluster, and year on year, in fact, if you look at the figures also, we have grown by almost 50 to 60% in the North Cluster, and the same growth rate is expected in the current year as well. So once we reach those targets, definitely the margins in the North Cluster will also improve.
How is the competition, sir, from large offline players, conglomerates, online giants? What's the competitive intensity looking like?
See, in mobile category, the penetration of online players is decent, whereas in other categories, in mobile as well as in the small appliances, their penetration is decent, whereas in large appliances as well as the televisions, so their penetration is relatively less. So I think we have to coexist, so we both will have our share.
You both will have your share, of course, Mr. Devarakonda. But, just to take that conversation away onto your working capital days, sir, your working capital days have increased to 80 now from 66, what they were at the end of March of 2022. What could be the reason behind that? And do you see that number trending down in this year?
What happened? Last year, there was heavy demand for air conditioners. In anticipation of similar trend, so everyone invested heavily in the air conditioner inventory, and that has resulted in because the season starts sometime in the last week of March and ends in the month of June. So that is the scenario. So this time we also, and in fact, on top of it, we added 40 more stores in the current year. So we have to maintain minimum inventory in display as well as backup stock. So for all these reasons, that was the scenario. But it will be evened out by end of the first quarter or latest by second.
But sorry, just one final question, sir. Was the decision to reduce the number of store additions a conscious decision? Because usually for expansion, you would look to add more number of stores compared to what you did last year, but you're adding lesser compared to what you did in FY25.
Last year was in a different scenario because we want to have our presence across all the district headquarters in AP Telangana. So that was our plan, and right now we have expanded to all the territories within these two states, and the scenario will not be same this year because our penetration is much decent compared to earlier years. So that's why it will be a steady growth year on.
Thank you, sir, for joining in. Pleasure chatting with you. For the markets holding up, the Nifty is above 24,800, but it's come off about 50 points from the top. It's still going strong, up nearly 1% on the benchmark indices. It's a wrap on trading hour from the entire team. Thank you for watching.